SoFi stock, you did it, baby. Let's go. So we're going to break down SoFi in this video, the earnings, the charts, my thoughts, what I'm looking to do as it's currently about 2 p.m. and SoFi's up almost 20% on the day. So hit the like button, make sure to subscribe. You might as well follow me on X and on TikTok at Stocks Talk Stocks. You might as well do that. And with that being said, guys, let's not waste any time. Cheers. Let's dive right into the video. So again, SoFi is up almost 20% right now, which is nuts. And earlier in the day, it was at $9.45. It was up, I think, 25%. Then we got that midday pullback to about $8.70, $8.75. And mind you, a couple of weeks ago, we peaked out at about $8.60, $8.70, which that was earlier in January. So we broke out of that. Mind you, now we're at multi-week highs. We pulled back, and now we're holding above that $8.70 level as we got buyers to come in. Now we're pushing back over $9 per share. So you guys know at this point, heading into these earnings, everybody and their grandma was watching out for SoFi and whether or not they were going to report GAAP profitability, right? Which they've never done that on a quarterly basis, and they just did it now for the first time. Do you guys remember the recent SoFi videos? We were talking about the estimates for EPS and revenue. Well, the EPS estimate was on average 0. So a lot of the analysts, pretty much on average, were expecting them to break even. So the fact that that came in at 2 cents is a very good sign for SoFi. The stock's loving it, and obviously that's the main reason why we're up almost 20% right now on the day. So let's break down this article a bit, then we'll actually get into the earnings release. Then later in the video, we'll wrap back around to the charts, talk a little bit about what I'm looking to do. So make sure you guys stick on throughout this entire video. So the fourth quarter brought a milestone for SoFi as the company delivered its first quarterly profit on a GAAP basis. Like I said, SoFi posted fourth quarter net income of $48 million or 2 cents a share, whereas it generated a loss of $40 million or 5 cents a share in the year ago period. An analyst tracked by FactSet, like I said, anticipated the company to break even on a per share basis. And SoFi also reported adjusted earnings before interest, taxes, depreciation, and amortization. I can never say that word right. EBITDA, of course, of $181 million, up from $70 million in the year before period. And the estimate was for $142 million. So they beat on that, which is great. And total net revenue came in at $615 million, up 35% from a year prior. And analysts were expecting $575 million. So they crushed on revenue, crushed on EPS. And take a look at this. Origination volumes for personal loans were up 31% in the fourth quarter, while such volumes for student loans and home loans were up 95% and 193% respectively. The company posted 19% growth in deposits during the fourth quarter to reach $18.6 billion. And you guys can see here, the company expects to see $550 million to $560 million of adjusted net revenue in the first quarter, along with $110 to $120 million of adjusted EBITDA. And you guys can see analysts were modeling for $578 million in adjusted net revenue on $125 million in adjusted EBITDA. So for the first quarter, the analysts were expecting a little bit higher for revenue and adjusted EBITDA, but not too much higher. And clearly the stock doesn't really care that, guidance is a little bit soft, a tiny bit soft. They're more focused on, again, GAAP profitability and the fact that management anticipates that the company will continue to be profitable on a GAAP basis into the first quarter, which we're in right now, calling for $10 million to $20 million in GAAP net income, whereas the FactSet consensus was for $8 million. So that's good guidance. The fact that the management team thinks we're going to be profitable again on a GAAP basis for the first quarter, although revenue guidance was a little teeny tiny bit soft. Really analysts are, or not analysts, but the investors out there are focused really on, the EPS. And you guys can see as now we're diving deeper into the actual earnings release, members grew pretty nicely for the quarter. They grew, 585,000 new members for Q4 23. That's up 44% year over year, as now it hit 7.5 million members. They just hit, you guys can see here. So that's been growing nicely over the past couple of quarters, between the 45 to 50% range year over year. And of course, growth in members has slowed down, guys. Let's be honest, as you know, the company's growing, it's going to slow down. Makes sense. You know, back in 2021, they were growing new members by 95% to 110%, 87%, right? Depending on the quarter. So that has slowed down, but still the fact that we're nicely growing over time, the members, that's great. And products is also growing. You guys can see here. Let me move my big old face a little bit over here. There we go, guys. So we can see products has grown quite nicely here. New products in thousands, the year-over-year growth for this past quarter, 41%, which is nice. And now new products, or just products in general in thousands, 11.1 million, which is fantastic. Galileo accounts also growing 11%. Looks like year over year, which is nice here. It was at 137. It looks like we had a bit of a deceleration in growth last year. It slowed down a good chunk, but now it looks like we're getting back, looking pretty good again on the growth side of things for Galileo, at least as of now. And this shows you right here the lending and financial services products, which that's grown 24% for lending products year over year to 1.6 million. With financial services products, they're up 45% year over year to 9.4 million, which has grown a lot more, I guess, over the last 3 years, 3 years. Financial services products has, as opposed to lending products, but both of those are growing pretty nicely. And let's see what else can we look at here, guys. This shows you the quarterly performance here. On the left, we have quarterly adjusted net revenue, which clearly that's been going up nicely over the past 2-3 years, or really 2 years. We can see year-over-year growth for Q4 23 was 34%. It came in at $595 million for adjusted net revenue, $594 to be exact. And quarterly adjusted EBITDA, $181 million for Q4 23. That's up 30% year over year. Very, very good there. You guys can see here the annual performance. That was quarterly performance. Here we can see the annual performance for the company. And let's come down a little bit more here. I do want to see, let's see something quickly, the way they break down their student loan, personal loan, and home originations. Like we said earlier in this video, they are up big time year over year in all of those segments here. We can see the full year. Well, it's pretty hard for you guys to see this, but maybe if I zoom in a bit, we can see the full year for, what is this here? Total originations for student loans, personal loans, and home loans. Total originations for full year 23, $17.4 million. You guys can see, or that's, in thousands, so that's billion. So $17 billion for all, loan originations for 2023. That's up from under $13 billion in 2022, which is nuts. So if you guys see here, you can't really see it. Well, actually you can. Look at the full year here on the right. So you guys see right here, top right, full year 2021 loan originations for all three segments, $12.6 billion. That barely grew from 2021 to 2022, from 12.6 to 13 billion. Now we've exploded in 2023 with $17.5 billion. And loan originations, we saw a huge spike in, you guessed it, personal loan originations from $9.7 billion in 2022 full year to $13.8 billion full year 23. And we'll see what this looks like next year with, of course, student loans coming back full force, and maybe more personal loans coming, for the company, as a lot of people are going for their personal loan products, and they do really look at, obviously, your credit score and your credit worthiness, and they go for people that have higher credit scores, which is fantastic. So that's a quick breakdown here, guys, on these earnings. I don't want to go too deep in this video, or too long rather in this video, because attention spans these days, guys, not too long. But we zipped through the key numbers here, and we talked a little bit about the charts, and let me show you now what it's doing, up 19.2%. And you guys know I'm long SoFi. I bought more a couple of trading days ago at $7.75. I bought a couple of months ago under $7, and I don't plan on selling, man. I'm planning on holding. I'm not buying any more at this point. Like I said in my video yesterday, I'd much rather SoFi crush earnings and have their stock go up, and that leads me to not being able to buy more in the short term. That's fine with me, and that's exactly what ended up happening. So right now we're breaking out. We're at multi-week highs, and by the looks of it, man, we could be testing that $10 level fairly soon here. And you could argue we might consolidate a bit in the mid-high eights. Totally possible here. Maybe the dust settles a bit after earnings, and we can see what it does from there. But as of now, we're breaking out. I'm still long. I'm holding on, guys. And yeah, that's pretty much it for this video, as SoFi is now over $9 per share. What do you guys think? Let me know your thoughts in the comments. Hit that like button. Make sure to subscribe. And you might as well get up to 15 stocks from Moomoo, each up to $2,000, guys. Use that link down below, or go to StockSurfest.com/Moomoo. Once you open up your account and fund it with at least $100, you get 5 stocks, and fund it with at least $1,000, you get 10 more stocks, totaling 15 stocks. And again, each of those could be valued up to $2,000. So get on it. Use that Moomoo link down below. And with that being said, guys, cheers. I'll catch you all later.